Ladies and gentlemen, welcome back to the channel. As you know, if you're an investor in Tesla, God bless you, you were down 9% on Friday. Is this selling going to continue? Can we look forward to a rebound? Or should we be a little bit muted in our expectations for Tesla this week and beyond? We'll talk about that here in this video, but first things first, yes, markets are open tomorrow for anyone that is confused. Tomorrow is Columbus Day, the banks are closed, and the bond market will be closed, which can make things interesting. Perhaps we can have a larger down day, or perhaps we can have a more muted overall day tomorrow, just because there's not going to be any money moving in the bond market, which is even much larger than the stock market. So whenever bond markets are closed and stocks are open, they either tend to be, nothing days or huge days. It's really not in between. And considering markets hit a new all-time high on Friday, there's something worth discussing. And I mentioned this in prior videos, but if you actually look at 2007, there's a lot of similarities to today, like literally day for day down to the exact day. And I've reported on this in multiple videos because I think it could be of something of importance. It doesn't necessarily have to be though. Okay. So in 2007, you hit an all-time high on the same day as we did as well this year. Not a big deal. That was the first weird coincidence. Second weird coincidence is that the Fed cut rates 50 basis points on September 18th of 2024 this year. They did that as well on the same date on this the same size rate cut in 2007. Following that rate cut in 2007, markets rallied until October 11th, when you hit a new all-time high in markets. Well, last I checked, Friday was October 11th, and we hit a new all-time high. What proceeded to happen in 2007 was downside price action. Between that high on October 11th in 2007 and the correction, you will, that lasted until November 28th, where you fell almost 11%. Now, heading into, let's call it the election. There was not an election in 2007, but, from October 11th through November 5th or so, markets actually fell about 6% in 2007. So, I don't want to say this is going to happen again, but there has been a lot of weird coincidences from just the, 2007 period and now. If we do get another weird coincidence, that would likely be to the downside and not to the upside. Now, do I think we're going to go through a 6 long year period where markets don't hit a new all-time high? From 2007 through 2013 was the next time you hit a new all-time high? No, I don't think that's going to happen. It would really take some kind of exogenous event for that to happen. Although, as I did report to you in the last video, North Korea is apparently sending their artillery to the DMZ to be on high alert to attack South Korea, which could turn out to be, to some degree, a black swan event. Now, let's hope calm heads prevail here in the Middle East and with North and South Korea, because the last thing the markets need is a war on the Korean Peninsula. That would be another disaster for potentially the U.S. economy as well. South Korea is a heavily developed nation. They are one of the two handfuls or so of developed countries in the world, and a strong ally to the United States. If there was a war with North Korea, this could escalate and go south quickly. And I think you could get some of these geopolitical headlines that negatively impact markets coming tomorrow. So I don't have high expectations for what stocks will do tomorrow. I do think there's a greater likelihood that markets are lower. But beyond geopolitical tensions, as long as things don't get worse and continue to spiral and there's more fear, markets can get over geopolitical tensions pretty easily. Okay? The big thing that markets are really concerned with right now is earnings. And I showed you guys the earnings calendar in the last video, but we'll briefly go over it as well here in this video, because I do think it's one of those things that is vitally important to markets right now. And specifically because earnings estimates have been falling recently. If companies come in with good earnings, those estimates might rise, and that could lead to higher stock prices. Typically, when estimates fall, stocks fall. That's been happening, but stocks have not fallen, right? If you get earnings estimates that rise, stocks tend to rise. And if earnings estimates start to rise here, that could actually boost up markets. Now, you get some AI stocks this week, but a lot of banks. So Tuesday, you get Citi, Bank of America, Johnson & Johnson, Progressive, United Health Group, Walgreens, Progressive, Charles Schwab, Goldman Sachs, PNC, and State Street. Tuesday, you get United Interactive Brokers and JB Hunt. Wednesday, pre-market, ASML, Morgan Stanley, Abbott, US Bancorp, Citizens, and a bunch of other regional banks. Wednesday, you get Alcoa, Kinder Morgan, PPG, and CSX, as well as Discover and Equifax. Thursday is going to be really the big day for big tech, TSMC. Now, we had really bad export data from Taiwan last month, and this was one of the biggest drops we have seen in over 10 years. A lot of it was semiconductor related. Now, perhaps there was inventory from NVIDIA and they just ordered less, or some kind of way you can justify this, considering NVIDIA's CEO just came out and said there's basically unlimited demand for NVIDIA products, and that's what sent NVIDIA, rallying. But if TSMC has bad earnings or just earnings that are not as good as expected, that's going to weigh on the whole industry. And at this point, the markets are AI. So you can't afford AI earnings to not be good. And NVIDIA reports late in the earnings season. So TSMC, ASML, these guys will be very important for this week. Now, Thursday and after hours, you have Netflix, which will have a large sympathy reaction, most likely, to other big tech stocks, to Meta, Amazon, Google, Apple, maybe even Tesla, right? Netflix tends to be very important. Intuitive Surgical, WD-40, Crown, and some others report. And then Friday, you have Comerica, SLB, and American Express, as well as Ally and Fifth Third Bank. Ally has had a lot of problems recently. The stock was down like 20% a couple of weeks ago. So we'll see. Regional banks could be a bit of weakness for markets. Now, we do have some events besides earnings this week. You do have some economic data. I'll briefly run through the calendar because it really picks up towards the end of the week. Thursday and Friday are really big days. But Monday, you have Fed Kashkari, Fed Waller, Fed Kashkari again, so twice. But that's pretty much it. Tuesday, you have the unemployment rate out of the UK. You do get inflation out of Canada. New York State Empire manufacturing index, you're expecting that's going to fall from 11.5 to 4. Anything to do with manufacturing or employment is going to be important for our markets. Fed Daily speaks at 11:30 in the morning on Tuesday as well. Fed Kugler speaks at 1 p.m. Fed Bostic speaks at 7 p.m. So that's it for Tuesday. Wednesday, you have ECB President Lagarde that gives a speech. You have export prices month over month and import prices month over month. This will be important because it will affect GDP estimates, which for Q3, you're currently sitting at an estimate of 3.2%. So that could be important for moving GDP estimates. Thursday, though, is really your big day. You have the interest rate decision from the ECB. They're expected to cut rates 25 basis points. That may or may not affect our markets. Probably not at this point, but we'll see. You have retail sales month over month that are expected at 0.3% positive. Last month was 0.1% positive. So here's the deal here. As I explained in one of the last videos, it's titled, I'm concerned, this is worrying, or something along those lines. Go, watch that video if you have not already. But we've already gotten some preliminary consumer spending data that shows consumer spending was actually pretty negative last month for the first time in 7 months. And retail sales are expected to be positive, 0.3%, which is, quite positive on a month over month basis when last month was 0.1%. I think there's a risk of this disappointing on Thursday. And if retail sales disappoint, then you're going to get more growth concerns, more recession fears, and that's really what will cause markets to fall. I don't think the election is much of a catalyst at this point. It's really all about the economy. Now, even more importantly is initial jobless claims that comes out at the same time on Thursday, 8:30 in the morning as retail sales. Last week, you came in at a one-year high. Some people tried to chalk this up to just hurricane problems, but you've seen a big rise in California, New York, Michigan, Washington, some other states. I think Indiana, Ohio seen, quite a rise in initial jobless claims as well. So you really couldn't brush this off to just being the hurricane. Now, you came in at 258,000, again, a one-year high. The consensus is 241,000 initial jobless claims, so a fall, but the forecast is 269,000. So the estimates are all over the place for this Thursday's number. Higher is going to be worse, lower is going to be better. So keep that in mind. Philadelphia Fed Manufacturing Index will come in as well at the same time. We're expecting a positive 3. Last month was 1.7. A bunch of other secondary data as well. Philly Fed business conditions, CapEx index, employment, new orders, and prices paid will come out. You have the ECB press conference, capacity utilization, industrial production, manufacturing production, business inventories, and a HB housing market index, some oil data. Fed Goolsbee speaks at 11 o'clock in the morning. Like, Thursday is going to be a complete data dump. And it doesn't end there. Because Thursday and after hours, you have the inflation rate out of Japan at 7:30 at night. And then you have GDP growth rate year over year out of China at 10 o'clock. Industrial production, retail sales, fixed asset investment, and the unemployment rate as well coming out at 10 o'clock on Thursday. So I really think Thursday and Friday are going to be the big days for markets this week. Now, for Friday, you have building permits. Preliminary numbers for September. You have housing starts for September, and housing starts month over month. This housing data could actually be important because we want to see real estate start to pick up. If that starts to pick up, that could be a big surprise to the upside for economic activity next year. Now, Friday morning, we also have a bunch of Fed speakers, Fed Bostic, Fed Kashkari, Fed Waller, and Fed Bostic, again, between 8:30 in the morning and about 1 p.m. Eastern Standard Time. So with all that considered, I think there's more risk of a downside move for markets in this upcoming week, but Tesla has already fallen a lot, so I don't think Tesla needs to continue to get beaten down as well. Tesla found support at its 100-day moving average, about $216.68 this past week. If we do see downside, which I think is likely this week for markets, you could be targeting that $200 level. Why I say that is because your downtrending trend line connecting the all-time highs to prior, let's call it bear market rallies, has come back down to be about $200 per share. So as long as we can stay above $200 per share over the foreseeable future, I think things look pretty good for Tesla. And I think if we break under $200 per share, the markets themselves are probably going to be in a pretty rough place. Now, the RSI for Tesla is 38.69, which is definitely getting closer to being on the, oversold side, but definitely could move lower. Now, a drop to $200 per share from here would be only downside of about 8%. But I think that 8% would also mean like a 5% drop in the S&P. Just because Tesla has already fallen almost 20% from the level of, about 265 where it was just at. So, I think Tesla would fall more than the markets, as it normally does. But I think the markets would also fall a lot if Tesla gets down to that $200 level. Now, am I buying Tesla stock right now? No. Will I buy Tesla stock? Yes. Anything around $200, I think, is a very, very fair level. I think that is a foolproof place to buy Tesla. I think right now is a foolproof area to buy Tesla as well, or around the 220s. Like, I don't think you'll go wrong with that. But there is still a lot of recession risk. There is still a lot of earnings risk. There's still a lot of geopolitical risk. And this risk is not accurately reflected in the headline S&P. And no matter how well I think Tesla's going to do next year, no matter, what I think about the AI capabilities of Tesla and all of the good things going on at Tesla, if markets have a rough time, Tesla's going to have an even rougher time. And that's really what it comes down to. This is not that I'm bearish on Tesla by any stretch of the imagination. I think Tesla's much better priced for a slower growth, recessionary-like environment next year, what we could potentially be in. I just think the markets are not. And the algorithms are going to sell off Tesla if the markets sell off. Now, could this week just continue to be good? Yes, but I think you've seen a lot of upside capitulation over the last couple of days, and eventually that stops and reverses. Again, you're not seeing the backdrop of this market getting stronger, you're seeing it getting weaker. So I would be much more excited if earnings estimates were rising as the markets are rising. Like, then you could say, okay, that makes sense, right? That's what's supposed to happen. But instead, for over a month now, you've seen earnings estimates coming down basically every day, and markets just going higher. That's a disconnect. That's a problem. And unfortunately, that could be a bigger problem for Tesla, again, if markets do come down. So that's kind of my opinion. If we do see upside this week, I think Tesla could target that gap to fill level at about 232. And that's the range, about 200 on the low side and about 232 on the high side. And I think a lot of the move could actually come Thursday and Friday if geopolitical tensions do not continue to bubble over. But I would not be surprised if tomorrow is a decently large down day based on some of these renewed geopolitical tensions on the Korean Peninsula. And again, people getting ready for earnings season. With that said, let me know what you guys think about this information down below in the comment section. If you guys want to come trade with us live in real time, check out that link down below in the description of this video. Earnings season is the best season. We have a strategy that tends to work pretty well in earnings that not a lot of people use. It's actually capturing the implied volatility and the ramp up that you tend to see in implied volatility heading into earnings. It's all about making contracts free, riding, a couple free options and letting that turn into potentially a lot of money. Sometimes a lot of money, like Palo Alto was $40 and $4,000, $4,800, something like that. 10,000% returns can be possible in earnings season with this particular strategy, while also minimizing risk. You can't get rid of risk. There's obviously risk, but this strategy is my favorite, and it really only works during earnings season. So it's a pretty exciting time every earnings season. Come join us if you guys would like to. Link down below in the description of this video. That is not financial advice. You can lose all of your money if you speculate, if you trade what I trade. I'm following very disciplined, plans with these trades, either to cut losses or, execute the strategy. And if you don't listen, you could lose a lot of money or all of your money. So definitely got to be disciplined to join that trading community, just as a disclaimer. So that is it. You guys enjoy the rest of your day. Stay safe out there. Go Lions, baby. And I will see you in the next one.